All right, I saw this one today, and I think it's kind of interesting. Okta. I've seen the name before. I think they had earnings recently, but I have no idea what it is. So we'll do three things. We'll look at the current valuation, the latest earnings, and then kind of a few other things to consider with the stock. So what I see right here is the company is let's see, cloud-based identity solutions. Allow customers to integrate with nearly any application, service, or cloud. Oh, I know what this is. This is that this is that annoying thing whenever you gotta if you work with like a bank or whatever and you gotta identify yourself or on your phone or whatever. That's what this is. That's where I've heard of it from. So yeah, this is all about um identity protection and information protection, whatnot. So, interesting industry. So we'll look at their latest earnings here. So they're going to be a heavy subscription company. So that's good recurring. And it looks like year over year they are still growing. So that's great to see. And the cost of their growth is pretty light. You're looking at a gross margin of like 80%, 70% around there. That's pretty good. So that's great to see off that. And then you got their research and development, which was flat. Sales and marketing increased a little bit. And then G&A is pretty much flat. So overall good growth. And you can see the operating income actually, definitely grew year over year. So that's pretty solid. So this revenue growth, keeping their expenses pretty much flat, has gotten them in the green. So that's great. And then looks like some interest income that they got. They must have have a pretty strong balance sheet. And then you're looking at income before taxes at 70 million. That's not bad. It's kind of cool. Who would have guessed that this company would be making that much money? Net income is 63, and then that's about 36 cents per share. So not bad. Recently, increasing their net income. Their balance sheet, I'm going to guess, is pretty strong. Yep, look at that. This is in millions. So this is where all their interest income is. This company has a lot of money. Holy cow. Massive cash position. Let's just see what their debt is, because sometimes the net cash position is tough. So, it's not too bad. And these are convertible senior notes. So I'm pretty sure what that means is that if the stock price gets to a certain point, the people that own these notes can convert the debt into equity. So a little bit of dilution, but it's not bad if that were to happen. And oftentimes these companies will set up these convertible notes to be at a price higher, so that way it doesn't really dilute the current shareholders as much, because it requires the stock price to go up before they can convert it. So not terrible. And it's not even that much. So let's see, is there anything else out here that I'm looking for? No. So very strong balance sheet. So cool. Let's just look at the statement of cash flows real quick. Because I want to see from operating activities. Yeah, look at that. Strong cash flow from operating activities. And then, yeah, that's all I want to check on this one. Sometimes I like to see for financing to see if they're issuing shares or doing buybacks, but I can see how this is negative. You can see, yeah, they're repurchasing the senior notes. Doing great. So that's reducing the dilution. So that looks pretty good, solid. But here's the thing: it always comes down to the valuation, because you can have a solid company like what this seems like, and then you can have people paying a lot for it. So right off the bat, I'm seeing this. This is a $13 billion market cap. So you got to ask yourself: do you really need $13 billion to make, where is it? To make 63 million, every quarter. So that's why this P ratio is really high. So that right there, you're looking at a pretty rich premium for Okta, in my opinion. Let's just double check these financials here real quick. So this revenue, the reason why it's showing 2.3 billion is because what we just looked at is 3 months. So we're looking at 3 months here, and here it's going to show you the full year. So you are seeing pretty consistent revenue growth, big revenue growth here from 2022 to 2024. So the tricky part is that if you want to keep this valuation, the market's probably expecting them to continue to grow. And let me see if there's anything else. Yeah, here's this net profit is pretty light. So this is where they made like 60 million or whatever in a quarter. So this checks out, this 235 million net profit. So it comes down to, do you need 13.5 billion to make a quarter billion? So rich premium, meaning that Wall Street is expecting this company to continue to grow. So just keep a mind out for that. Let's look at a few other things with Okta. Compare Okta stock PE. I mean, this is all a valuation question because it's obviously a healthy company. Compare Okta stock's P ratio to its competitors. How much would Okta need to grow its net income to justify its current valuation? Okay. Yeah, market expects earnings to ramp significantly, which is what we were saying. You can see right here, its P ratio is about 50. Look at this. Palo Alto has a much more rich valuation. Fortinet is cheaper. Whoever these guys are cheaper. Whoever these guys is cheaper. Probably for a good reason. We can maybe look at those another day. But it's kind of in the middle. So that's good to know. It's not like these guys have a super premium valuation. Let's see. Scenario A. It's priced for steady growth. I think that's about what I need. So that's interesting. So it's not super overvalued to the market. And again, I gotta be careful with this. Having like a high PE ratio, high premium isn't always a bad thing. Because a lot of times companies that have those high valuations have it for a reason, and it's showing that, the company's, growing and really doing something amazing. So just keep that in mind. I would say our insider buying this stock. More selling than buying. What does the company of Okta plan to do with all its cash? Because it has a lot of cash. Okay. 2.5 billion in cash investments. We'll go in cash generation, share buybacks. Authorize a 1 billion share repurchase program. Now let's check that real quick. Shares outstanding, 176 million. So that will keep going down, and that's not too bad. And they're paying off debt, which we saw in the statement of cash flows when it was repurchasing those convertible notes. That's what they're doing. Okay, maybe some mergers. This could be a catalyst, some sort of merger, because they have the cash. They got plenty of cash. So, but for now, this is kind of what they're doing. So, this is an interesting thought. Really interesting. Let me know what I'm missing or not thinking about, or if there's any sorts of big catalysts that are coming up. If you're holding it, let me know why you like it. If you're shorting it, let me know why you're shorting it. And I'll see you guys in the next